Thanks for the invitation. First, thank you for the Macedonian Stock Exchange for having me. And I really was delighted to discover Ohrid, a really beautiful city and historic lane of a lot of churches. A really beautiful area that I discovered here. So thank you for that. I'm coming from Belgium. Also known as the gold plating from the West. So I heard a lot of gold plating here as well, so I'm glad to maybe establish a club of gold platers. Could be maybe of interest having West and East combined in that way. So that's where I come from Antwerp as well, diamond capital of Europe. I don't have any diamonds with me, so please don't kidnap me. But I was here and I was listening carefully to the panel, and what I heard, I think private banking could be more developed here and help for a lot of things that was talking about during the panel, because liquidity, of course, private banks do provide liquidity. They are a link between retail and between capital markets. What else? It was financial literacy. I think private banks are really there to help their clients understand what they invest in, where they want to put their money in. So it's really important to have that link between your clients and capital markets, retail clients, semi-retail clients. So I think it makes sense to really invest in that area, try to have more, maybe commercial banks having a private bank offering, or have independent private banks. Of course, the more independent, the better for the clients in general. So, no, really, I think it is a perfect link for extra aid to the capital markets here. So how to cater? I told you about the why. So the why is, of course, liquidity, more financial literacy, more money going to the markets. But how do you do it? I would say we try to do it in a personal, long-term, and prudent, efficient way. Why efficient? We heard about gold plating. If you're not investing into IT, trying to have really efficient personnel, you will become completely devastated by regulation, too much burden. So we always had about a quarter, we exist since 1936. Of course, there wasn't IT back then, but back in the 70s, 80s, always had 1/4 of our personnel in IT. Now we're 600, we had 150 IT guys looking at regulation, looking at new developments, also, of course, catering for younger clients, having apps, digital access to portfolio everywhere in the world. So really important to have that. So to be efficient when we talk about private banking, it can be looked upon a little bit, old-fashioned, but don't be old-fashioned. Really go for that efficiency. Prudent, of course, you want your clients not to lose their money. You're managing other people's money, so it's really important to have that long-term view, to have that prudent view. Actually, we had our results, I will show them later on, purely with cash, equity, and bonds. So no special funds, no special private equity, things like that. We had terrific returns thanks to those really easy asset classes. And it gives comfort to your clients as well, because what do they want, your clients? They want liquidity, they want to have their money quite tangible. I heard people are more used to real estate here. So there as well, you make it as tangible as possible. If you say to your client, okay, if you need your money, tomorrow you have it, no worries, it's super liquid, he will be, or she will be, very satisfied to have that opportunity. And of course, personal. You don't want to switch your contact every 6 months. I think that's really key as well. When you're in private banking, people talk about their plans, about their wealth, about their family, about their kids. They don't want to see another person every 6 months talking about it. You really have to know your client very well, and in order to do so, have that long-term view as well, and personally. So I would say that is really the setting the scene of how you would implement private banking and have private banking to have that well made. After that, if you have that set up, of course, investing is a personal matter. And but maybe it's a little bit double story here, because you determine that investment profile, which is very personal. Of course, some people want full equity, some people want only bonds, for example. And it depends on the knowledge, the experience of the financial instruments, the current financial situation, future financial situation, investment horizon, investment goals, etc. But in another way, we manage that money in a very structured way. So it's not bespoke. It's not that every client in our clients, we have 60,000 clients, has a different portfolio. So you want to have a very structured portfolio. You know, it's just the mix that will change from one profile to another. So be granular enough in those profiles, because you want to cater for all risk profiles. Every client has a different risk profile, approximately. You can see it on the screen, from 0 to 100% equity risk, quite classical. So in between you have balanced funds, so going from 25 to 50 to 65% equity. But inside those portfolios, all assets are the same actually. So if you have Microsoft in the full equity profile, for example, you will have Microsoft in the defensive portfolio as well. So it's not bespoke, so we don't see the point of selling Microsoft or saying to one client, oh, for you Microsoft is great, but for you Apple is way better. It doesn't make sense. But what's personal about it, it's, yeah, of course, some people want less equity and some people want to take less risk. So you have to be, not to push your client taking too much risk if he or she can't cope with it. So I think that's very, very important when talking about private banking. It's always thinking with your client, what is best for his situation, with his kids, financial planning. That as well, I haven't touched upon that, but of course, the whole fiscal situation, succession is part and makes part of a good private banking solution. And I haven't heard a lot of comments in the panel about climate, and of course wars are waging across the world, so it's a really tough moment, but climate as well. I think we don't have to forget about it, and institutional clients don't forget about it neither. Here you see it's a little bit small, but it's a survey that was made by Robeco beginning of this year. And it's gathering approximately 28,000 billion in assets under management of institutional clients. And you can still see that within those institutional investors, climate is still on top of their agenda. So when investing, don't forget to combine risk, return, and ESG in a larger scale. So, sorry. How to do that? And I think that's also a trend. It's not excluding everything that could be bad or will be bad or whatever. No, try to engage with the companies you have in portfolio. Try to push them to more transition, to more sustainability, doing their business. Do not try to change their business, but change the way they do their business and to make it more sustainable. And of course, that's also a sign of what's happening. We talked about geopolitics and politics across the world, more and more polarization, because some people do care really fundamentally about sustainable investments. And on the other hand, you can say, okay, there's insufficient demand from end investors. So you have to balance with that. Of course, you can't do everything right for everyone. But you can, of course, do what you think is good for your investments. So challenge, investing consciously, taking responsibility, and of course deliver return, because as a private bank, you're there for your clients to have return based on their risk, but also having your own beliefs and try to take responsibility with the assets you manage. We manage approximately 47 billion in Belgium, 60 across Benelux and UK. So you have responsibility when managing that money. And so we try to do that. I touched upon it. I will be short about it, but not too much exclusions in the portfolio. So we exclude firearms, we exclude tobacco, for example, high ESG risks. But the main part is that engagement. So we work with an external partner, which is Federated Hermes EOS. They run 1,500 billion together with other pension funds, with other private banks, with other asset managers, and we engage all companies in portfolios, in our portfolio. So we try to push them to more sustainability, and that can be different for every company you have in portfolio. Of course, Microsoft is not the same as Total Energy, or as Chevron, or it's not the same as Engie, or you have different sustainability issues for a lot of sectors, so it's really catered and a lot of action there. It's 10 to 15 contacts per year trying to push that sustainability further into our world, actually, so into companies. So results, I think, of course, you can say you're talking a lot about how and why, etc. But what's the result? Here, I just shown what the, of course, we didn't have as high inflation as here. I think the past 10 or 20 or 30 years, it's approximately 2-3% in Belgium. So having a 10% 15-year average return full equity, I think that was quite good after costs. And I show some, it's Morningstar, I don't know if you know it, it's a big company that rates performance and sustainability for funds. And our funds have all 5 stars, which is the highest rating, and the 5 globes you see on the screen as well, so highest environmental rating as well. So you can combine responsibility, alignment of interest with your clients, and good results for your clients. And on the other hand, because you would say, okay, but is your company growing and by doing that, and is it profitable? I think here we can show it's balanced growth since 30 years now, exponential the last years. This year already we have like approximately 2 billion in inflow, net inflow. So a really success story there. For Belgian banks, quite a low cost-income ratio. We have 40% cost-to-income ratio, and the average in Belgium should be around 70 to 75%. Return on equity 17%, and a very high core tier 1 ratio of 47.5. So it's by combining that long-term view, having focus, that we have those results. Net results last year was nearly 180, so 180 million net profit. By doing all this, so you can combine really good returns for your clients, really good service for your clients, personal service, by having that focus, by having that responsibility, and providing good private banking services. Thank you. Are there any questions?